Hey, what's up guys? Welcome back to the channel. In this video, I want to discuss the bombshell data that we have just received from the top 3 Chinese automakers, NIO, Xpeng Motors, and Li Auto, because we have some important data to look at that show that these stocks in general are quite undervalued right now as the Chinese economy is opening back up. I'm going to look at the NIO and the Xpeng Motor delivery numbers to understand where these companies are in respective to each one of their growth trajectories and what could be in the future for the short term of both of their stock prices, because I'm sure a lot of people are very concerned after some of the recent selling we've seen after the massive rally in the stock. But as usual guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So the first thing I want to address is the delivery numbers for Xpeng, Li Auto, and NIO as well. So let's start off with Xpeng. As you can see, they delivered around 15,000 vehicles in June, which is a very good 133% increase year over year. And this is a 90% increase year over year for the second quarter. Now this is very good for the stock because this means that this company is continuing to grow even though they've hit very big records in 2021, which shows that their products are appealing to the market that they're selling into. And we need to keep in mind that Xpeng is selling multiple new products over the next couple of years. They obviously have the Xpeng P7, which is a smart sedan, which is around in the mid-size category of maybe a Toyota Camry or a Honda Accord. And they also have the newly introduced P5, which is a smaller, more affordable sedan, which is more in the range of a Toyota Corolla or a Honda Civic. And this thing right here starts at only $25,000, which means that the average selling price for Xpeng as compared to NIO or Li Auto is going to be much lower. So that's something we need to keep in mind when it comes to analyzing and comparing the revenue. Even though the revenue per unit is going to be lower for Xpeng Motors, their overall growth opportunity is going to be slightly higher because obviously the sedan market is much more popular in China. But regardless, if we now look back at the year-over-year increase for the first 6 months, as you can see, we had a very healthy 124% increase year over year. Now, the reason why this is important is because many people dismiss China as going into a recession in 2022, and the fact that any Chinese stock, whether it be in the EV industry or even something like Alibaba or JD.com, would be completely uninvestable. But clearly, we're starting to see that the Chinese consumer is bouncing back extremely strongly. And this is also going to play in the hands of something like Tesla, whose stock price has obviously struggled over the past few months as you've seen fears of lockdowns in China and some of their production being halted because of retooling and whatnot. But as usual, as we've known, China is going into an interest rate cutting period right now, unlike the US, which is hiking rates, which means that China's monetary policy is in an expansionary phase, not a contractionary phase. And that is very important to keep in mind because that means that overall spending in China should actually go up instead of going down. And that's unlike the United States. So if you want to hedge your exposure to US equities, then China is looking extremely attractive right now, even though I know a lot of people don't like investing in China. But at the end of the day, as investors, I don't care about the social media or the politics. I care about the value that I'm getting and the growth trajectory down the road. Yes, there's risks in investing in any kind of company, and sure, with China, there is a little bit of extra risk. But a lot of that could already be priced in over the past 2 months. But regardless, now let's look at the NIO delivery numbers and compare them to Xpeng. Now, I don't really like to do a direct comparison. I just like to see what this data tells us about spending in China. As you can see right now, we've seen a 60% year-over-year growth in June and a 14% year-over-year growth in the 3 months ending June, which is the second quarter. And I think this is a reason why something like NIO stock has actually underperformed a little bit as compared to something like Xpeng stock. I did see a lot of people on social media really question why NIO underperformed something like Xpeng. And I think it's quite clear because when Chinese consumers cut back their spending, they're going to cut back their spending on some of the more expensive products. And as we know, NIO sells SUVs primarily. Even though they have new sedans that are coming online, right now most of their revenue is coming from mid-size and compact SUVs, which are obviously a little bit more on the pricier side. And I think that's why NIO stock has underperformed a little bit more than Xpeng, and obviously because of the fact that NIO has been on the public markets for a significantly longer time. As you can see, NIO went public back in 2018, and their stock had a much bigger run to the upside than Xpeng did. And I think that's simply the reason why we've seen this little bit of a divergence. But regardless, if we now look at Xpeng, let's get an idea for where this stock could actually be headed in the short term. And I think this will play in the hands for any Chinese stock you're trying to really consider investing in, because the entire Chinese sector is actually moving in tandem. As you can see right now, what we're seeing is a move to the 200-day moving average on Xpeng Motors. And the reason why this happened is primarily because, as you can see, we formed this incredibly strong double bottom area around $18 and $19, which means that we kind of flushed down here, we bounced, and then we came back down to that same level and bounced from there. This is essentially a confirmation move of a bottom. And even in the US markets for the S&P 500, the bottom is going to look very similar to something like this, where we have this capitulation, rally, and then another sell-off before we move higher. And this is the reason why even something like Alibaba stock has been outperforming some of the other stocks in the S&P 500, because the Chinese market is actually outperforming the S&P 500. The Chinese market has already bottomed because people are realizing that China is now starting to go into an economic expansionary phase, which is leaving a lot of room for growth for a lot of these Chinese equities. As you can see today on Friday, we did have a very red day on Xpeng, and this is the same case on something like NIO and Li Auto. Now, there is no specific reason why I see this happening. I'm not sure if there's any bad news that has come out, maybe in China, or something has leaked, but I think this is primarily being driven by options expiration. As we know, on Fridays, options tend to expire, and that leads to many people buying call options. And since obviously on the other side of the trade, there is some hedge fund that is selling you that option, these hedge funds make sure that these options expire worthless for as much as possible. And it seems like even on NIO, that is the same case, and the reason why this stock has been going down recently. But again, in the long term and in the medium term, the outlook for China is looking a lot stronger than many people have expected. And I think overall, that is a good thing if you're an investor in either one of these stocks. Now, before we wrap things up, I do want to address one tweet that I recently came across from Felix, who's another fellow YouTuber, where he made this graphic comparing NIO, Xpeng, and Li Autos and their gross profits. And as you can see clearly from this data, it looks like NIO is in the lead. And as you know, I am personally invested in Xpeng out of all three of these EV stocks, because I think that over the long term, these three EV stocks should perform similarly as the entire China EV market grows. But for me, the bets are more on Xpeng because they're launching more products and they're just innovating at that little bit of a higher level, while also growing year over year at a faster rate. But regardless, as you can see, it's clear that the month-over-month change in gross profit is significantly higher for NIO. But the key thing to realize is that this is primarily driven by the fact that NIO's revenue per car is higher than Xpeng's. And why is that? Well, because NIO obviously sells SUVs. As you can see, they sell compact and sports SUVs, even though they have, yes, recently launched with the ET5 and the ET7, which I think are compact and mid-sized sedans. These are not going to go on sale, I think, at least for the most part of this year. So their revenue is most likely going to be realized in the latter half of this year. And as the economies of scale grow, then their gross profits in the profit margins are going to be realized potentially next year. And so that will reflect in the revenue per unit for NIO, and that's what's going to bring that down. But at least for right now, I think it's quite clear that this is a comparison we simply can't make, and that we can't use that to essentially calculate the gross profit number that's coming here, and then obviously the year-over-year growth, because all three of these companies are actually selling in completely different car segments. Li Auto, for example, is actually selling a hybrid SUV, and they only have one product. So because of that, their gross margins on average are going to be higher than the rest of the competition. Xpeng obviously sells sedans, which are historically known to be a little bit less profitable, but they are also expanding into the SUV space. And so we'll have to see how things play out in terms of the gross margin side over the next couple of years. But I think this comparison makes more sense once all these companies have very similar product lines out on the market. And for now, at least, the real thing that's going to matter is growth and market share. And with Xpeng launching this amazing looking G9 in the third quarter of this year, I think there is some competition coming for NIO, and vice versa for Xpeng when it comes to NIO sedans. But But as usual, guys, make sure to drop me a thumbs up if you found some value from this video. Let me know down in the comment section below what you guys are doing with Xpeng, Neo, or Li Auto stock. For me, I'm going to be buying the dip on any major pullbacks we see on Xpeng, and similarly, a thesis could be applied to something like Neo. But as usual, guys, make sure to drop me a thumbs up, and I'll catch you guys in the next one. Take care.